This episode of the Blackboard is brought to you by Selling SaaS Globally, a SaaS leader's practical guide to global expansion. Sign up by clicking the annotation above. What is earnings before interest and taxes? Earnings before interest and taxes, or EBIT, is one of the subtotals used to indicate a company's profitability. Simply put, it's your company's revenue minus its expenses, excluding tax and interest. EBIT is also referred to as operating profit, operating earnings, or profit before interest and taxes. The formula looks a little something like this. EBIT equals revenue minus cost of goods sold minus operating expenses. Revenue represents the total amount of money earned from product sales. Cost of goods sold include the raw materials, employee labor, and shipping that goes into selling your product. Operating expenses refers to running costs like rent, corporate salaries, marketing, insurance, and equipment. As an example, let's use the following metrics for a sample company. Let's say a company's revenue is $1 million. Then the raw materials and other expenses that go into selling the product is $600,000. The rent and salaries for this company is $100,000. Using this equation, the EBIT for this company ends up being $300,000. EBIT is a vital business metric that comes in handy for several scenarios. For instance, when an investor is buying your company, the earning potential is more important than the existing capital structure. Calculating EBIT can also help investors or analysts compare your company with others in the same field. Ultimately, EBIT will show you what your business's operational efficiency looks like. EBIT also has its limitations. Companies with a lot of capital will spend a substantial budget on the upkeep of those assets and amortize and depreciate them as a result. So if you want to include that in your calculation, make sure you add in depreciation and amortization. Then you end up with EBITDA. This is a better measure of your company's operating profit, especially if you have a substantial number of fixed assets. There are other limitations of EBIT too. They include not accounting for company debt, variance between industries, and measuring cash flow. Click here for the next video in our series and make sure you subscribe to get episodes of the Blackboard delivered straight to your inbox.